Top of the morning to you, and welcome to our newest episode of Capital Markets Quickie from MVP Mind Value Partners. It was a historic week for America and for the whole world, watching and waiting anxiously. Joe Biden will become the 46th President of the United States of America, and it only took 4 days after the elections to count the votes and announce the winner. And that is very unusual, but then again, everything about this year, 2020, has been quite unusual. My name is Endrit Cela, coming at you from Frankfurt, Germany, Europe's financial hub and home to the ECB. Let's take a closer look at what moved the markets this week. U.S. stocks logged their best weekly gain since early April as investors reacted to the increased possibility of a divided government, including a potential Joe Biden win and continued Republican control in the Senate. The final result of the U.S. election is exactly as the market anticipated. Yesterday, on November 7th, Joe Biden was announced as the next president of the United States of America. The Senate remains under Republican control and the House of Representatives under Democratic control, so nothing's changed there. The market began to price in the scenario of a split government that potentially reduces the likelihood of immediate tax hikes and increased regulations, while not removing the potential for an agreement on some form of fiscal aid package. Of course, there are a few months left until Joe Biden will officially enter the White House in January of next year. On the economic front, the jobs report showed that despite the lack of additional stimulus, election uncertainty, and rising virus cases, the labor market continued to heal. And that signals that the U.S. economy recovery is still well on track. Largely overshadowed last week was, however, the Federal Reserve's latest interest rate decision. And surprisingly, the central bank heroes left their policy rate near zero and reiterated their commitment to keeping rates lower for an extended period to support the U.S. economy. Even though we still find ourselves in the midst of all the election drama, we should not forget that monetary policy will be one of the most powerful forces behind the markets in the years to come, and not whether we have a Democrat or Republican in the White House. Historically, stocks have performed well under both Republicans and Democrats. There are very interesting charts that you can take a look at. Let's not forget how the stock market boomed in the 90s under Bill Clinton, and well, they did not do so well under George Bush, even though we are taught to believe that Republicans are better for the stock market, and that wasn't the case with Bush. And also, historically speaking, stocks have performed well in periods of loose monetary settings. And it is very unlikely that the Fed, the Federal Reserve Bank, the Central Bank of America, or any other central bank will start monetary tightening anytime soon, which leaves Fed policy as a potential wind at the market's back as we advance into 2021. So what does a Biden win mean for the stock market? Well, under current circumstances, we have an ideal structure of government where the president can be agile but not too agile. It is, after all, important that the checks and balances of the American government are in place. And with the Republicans in Senate, we have just that, an organ that will keep Joe Biden in check. On the other hand, we have a president who is more predictable and, yes, more boring, but that isn't necessarily a bad thing. On the contrary, it is a very good thing. One thing is for sure, Twitter will lose a lot of popularity now that everyone won't be checking Donald Trump's feed every hour. Well, it's time to put the jokes aside and for the United States to be united and once again become a reliable partner for the rest of the world. And that, ladies and gentlemen, concludes today's short episode of Capital Markets Quickie. To all of you listening from every corner of the globe, I wish you all the best and stay tuned for our next episode on Sunday, November the 15th.